Joining us right now to talk more about all of this is Jaret Seitberg of TD Cowen, Washington Research Group. Jaret, we had thoughts on Friday about this, but my guess is you've got pretty different thoughts watching everything that happened this weekend. What's your take on what we saw in Switzerland and what this means for the U.S.?
Yeah, well, I think right now UBS has to be the world's safest bank. I mean, the Swiss authorities have told everybody that this thing is too big to fail, and they just can't resolve it. So, in the flight to quality, UBS is now, in the spotlight and the safe place to be.
Safe place for depositors or safe place for shareholders?
For depositors.
Not necessarily the case for shareholders.
Worried about their money.
Right. Go ahead.
Oh, well, I was going to say is that, I really think, though, the big news over the weekend is that the FDIC sold Signature Bank, and the loss is only going to be $2.5 billion. And, granted, I'm from Washington, but even I can figure out that's only 2.5% of total assets for a $100 billion bank. That's on the low end. And, it suggests that the hit to the deposit insurance fund is going to be much less than expected. And we may not see those higher deposit insurance premiums that the three of you were talking about earlier this morning.
Meaning that you don't think, the mid-tier banks yesterday asked the government, the FDIC, to come in and insure all deposits. You don't think that should be done?
Oh, well, I'm not willing to go there yet. I think that is the, break the glass emergency option. This is a really healthy banking industry. The net income last year was $263 billion, according to the FDIC. Net interest margin was up 82 basis points to 3.37%. So what we really have is a crisis of confidence. Banks are designed to be illiquid. That's what loans are. They loan money to the government, to people, companies. And what we're seeing here is a confidence crisis. And that's why, at the end of the day, unlimited to deposit insurance is the final act to restore confidence. But I'm not sure it's needed today.
You say that, but we're looking at month to date, some of these regional banks that are down anywhere from 35% to more than 80% in some places. First Republic is down this morning another 15%. Is it okay for those banks to shut down? And if they do, what message does that send to depositors in any of the rest of these banks?
Sure. So I don't think regulators are as focused on the stock prices as the rest of us. I think they're really looking to see what depositors are doing. I think it was very positive that we got through Friday and the weekend without another regional bank failure. But as we saw in 2008, falling stock prices eventually do impact consumer confidence in the bank. And
right.
So if you're First Republic, of course you got to be worried. That's why we saw such efforts last week to back